Happy Sunday, everyone. As you guys know, I'm bearish heading into October and November. Spectacular. But in today's video, I'm going to give you guys the rundown of what I think is going to end up happening in the coming week, coming few days. We're going to take a look at the SP500, the NASDAQ, the Russell, the dollar, the bonds, the VIX, the large tech stocks. We're going to take a look at the Chinese markets, the Indian markets. We're going to take a look at Forex, the pound, the euro, gold, silver, all that good stuff. All right, so without further ado, let's get started with the video. All right, first and foremost, this is a chart of the S&P 500 futures. All right, so clearly what we can see here right now is that we are trading above the uptrend level that we've been trying to maintain. Okay, so we are trading above this very major level of support. The futures are currently green, and the level that needs to maintain for this to continue being above this trend line is 64.60. So what I like to do in general to see if a move is going to continue or not is we want to see if the 23.6% Fibonacci level from the most recent lows to the most recent highs can maintain themselves. All right. So what we can simply do here is take the Fibonacci level from the most recent lows and connect it to the most recent highs. And currently what we're seeing on the S&P 500 futures is that we are comfortably trading above the 23.6% Fib. This shows a lot of strength, right? The fact that we have not even come and retested the 22.6 oftentimes is very, very rare. The fact that we have not touched this level is very rare, but generally we do come back to test the 22.6, and from here or at the 38.2% Fib, both retests of this level are bullish. These are bullish levels that the market can come back and retest to see if we will continue to the upside. For us to just be above this Fib level without retesting it shows extreme strength, but it's not necessarily sustainable. For it to be sustainable is we need to remain above this trend line. Okay? So this is the first line of defense. If this breaks, then a nice simple 22.6% Fib retest is on the table, by all means. And then the next comfortable, solid spot is the 38.2, which is also generally a solid level of support as well. So in general, what we're seeing right now is that the S&P is holding above these trend lines, okay? And it's holding above these levels of support. What we're seeing from the large tech stocks as a whole is that some of them are starting to curl downwards. You can see the MACD levels on some of these stocks starting to curl downwards as well. And a lot of these tech stocks are starting to have to make a decision. A lot of these stocks are at the 22.6 or the 38.2% Fib on these individual names. So if these individual names are at breaking points, very important levels of support, where if they break to the downside, then the overall market as a whole is going to end up breaking to the downside. Which is why I'm primarily trying to give you guys the presupposition that this overall, this move that we're going to get, generally really should not sustain itself. Generally, what should end up happening is we should break down to the downside and come to a level of support. If this continues making new highs, statistically, this is not something that generally happens. All right, there's that for the S&P 500. We'll take a look back at it afterward, towards the end of the video, after I've given you guys a better, clear-cut understanding of all of the large tech stocks as a whole, so it'll make more sense. So this is a chart of the NASDAQ futures, and what I was mentioning earlier was that what we like to do to see if a continued move to the upside is possible is if the Fibonacci levels of support maintain themselves. So for us to do that is we simply open up the Fib tool, connect from the most recent lows to the most recent highs. And as you can see on the NASDAQ, the 23.6% Fib held as support. We got a touch perfectly on the NASDAQ at the 22.6. This, however, is really not the most bullish setup, just purely based off what we're seeing right now. A more bullish retest would be as if we can come back to the 38.2% Fib. But pragmatically speaking, the 23.6 is where the first instance of buyers would need to hold. They would need to hold the line here. And that's exactly what ended up happening. If we break below 23,750 on the NASDAQ, there is a lot more room to the downside. So we are right at a major level of support on the NASDAQ. We held a 23.6% fib. They're really trying to hold it up because I'm telling you guys, if this level of support breaks and we get a solid close or two below this level of support, then the market can really start to tumble lower because a lot of these large tech stocks are also starting to show some weakness. And it's very important to look at everything as a whole, okay? I'm just showing you guys the statistics. I'm showing you guys the numbers. And I'm giving you guys the highest probability chance of what ends up happening. This is the market in general right now at this level of support is at such an important level. And I cannot stress that enough. So we're going to have to see if this week we can end up holding this. If not, then we're going to play to the downside as well. Overall, though, our day trades have been completely on point. So as you can see, this is a channel in my Discord server where I share free trades. I share some free trades, but then the remainder of these trades I have inside my closed group. And we are absolutely killing it. Regardless of what's going on in the market day to day, overall, wow, we could be bullish, bearish. It's completely irrelevant because when you learn how to day trade properly, any sort of move that occurs in the market, you can make money every single day. The market can be extremely bearish. We could be ripping to the upside. I could be holding on to swing puts. But then regardless, day to day, the money is made in terms of day trading. So as you can see, I am completely transparent. I update you guys on how many trades I win and how many trades I lose. So currently, we are on a very hot win streak. And as you can see, I even made a Google sheet that basically shows every single trade I've taken recently with the percentage gain and with the percentage loss of the losses. So on average, this is a 39% gain per trade that we win and a minus 24% loss for every trade that we lose. But the numbers is that I have basically a 90% success rate. So we've taken 27 trades. 24 of them have been winners. And on average, out of those 24 trades, it's a 39% gain. The numbers do not lie. I have been updating you guys on how these trades have been going for the past week and a half. If you guys want access to my trades, to everything, right? I have no reason to lie or stat pad or anything like that because I've been doing this for years. There are tons of people in my group. There's a reason why you guys are even watching this video is because if you're completely new to this as well, I have been doing this for a very long time. I've been live streaming my trades as well. If you guys want access to all of my trades, every single time I'm entering, exiting, the exact price I'm entering and exiting with, the list goes on. You guys get all of access to the reason why I'm entering the trades. You get access to my thought process throughout the day. Everything all in one. So if you guys want access, click the link down below. Click the link in my bio. And you gain access to not only my trades, my trading view indicator. In and of itself has helped people pass their funded exams. They are funded with just my indicator. Regardless of whether I'm going long and short on the S&P and the NASDAQ, people are literally just using my indicators in themselves. And they are making tons of money with just the indicators. All right, so the proof is in the pudding. You guys could click on the link. You guys could check out my reviews. There's nothing to hide. There's nothing to lie about because that's the beauty of what I'm doing. When you're good at something, you let the results speak for itself. And that's the blessing in all this as well. So I hope to see you guys there. Let's get started with the rest of the video. Real quick, before we continue, I want to really just thank this guy for making the channel. As soon as he made the channel, I really started to just really wanted to go very, very hard at day trading. And like now this is going to be pretty fun. So it's going well. We're on a 90% success rate. Things are going really well. I'm trying to share as many trades as possible, but we're not trying to force trades. go ahead and subscribe to his channel. He hasn't really been very active. Hopefully he becomes more active. But yeah, it's cool. Anyway, let's get started with the rest of the video. All right, so this is Apple, right? Apple, clearly, we have been showing a lot of strength on Apple. From the most recent lows to the most recent highs, Apple is up about 16, 17%. And once again, what we want to see across the board on all of these large tech stocks, any tech stock, any stock that we're going to be monitoring today, this is how we're going to monitor how strong of a move this can be. Okay? So all we're going to do is we're going to take the most recent lows, take the fib tool, get the most recent lows, connect it to the most recent highs. And where are we according to the Fibonacci levels? Again, Apple has not even reached the 23.6% fib, where we just saw recently the NASDAQ did retest it. So this is showing that there is room to the downside for us to retest the 23.6. Testing the 22.6% fib is very, very, very doable. So the fact that we have not, the fact that we're in la la land right now, this sort of strength, it's clearly strength, right? But it's not sustainable. It might sound like a broken record, but right now, something like this, the most logical thing would be for us to get a pullback. If we don't get a pullback, obviously the levels that we need to hold clearly going to be 230 on Apple. If 230 can sustain itself, great. You could go long against 230. You could have a tight stop loss if it breaks below 230. If 230 holds, spectacular. It shouldn't, though. But if 230 holds, we could see 240. Spectacular. But the highest quality trade right now is you either go long at 230. If it breaks below 230, then you start leaning short. And you can really catch a lot of downside potential here. And once again, Apple it's trying its best to break above 235. We got two tests right at 235. Both failed. And then on Friday, we got a big move to the downside. Relative, right? Obviously, this is still really, really strong. But this is a red candle after 3 taps at 235. All failed to break above. This is not the most bullish, right? But technically, we're still holding above 230. And that is a level that's going to maintain itself. So we have 2 trades that you can take. Go long with 230 as a stop loss. Or once we break 230, you go short. Nice and simple. All right, so NVIDIA and AMD. NVIDIA and AMD are both starting to look kind of interesting here. Okay, so what we're going to do is very, very simply, we're going to take a fib level from the most recent lows to the most recent highs, and we're going to see how far away we are from the certain fib levels on NVIDIA and AMD. Okay, so nice and simple. NVIDIA here, this is, you could see how interestingly weak NVIDIA is starting to be, right? So as you can see here, NVIDIA not only broke below the 23.6% fib, it teetered below the 38.2% fib, but then we ended up closing above the 38.2. So it started to break even lower. So as you can see, NVIDIA is relatively weaker than Apple is. NVIDIA it started to show some weakness. It even broke periodically below 180. So as you can see, bulls really, really want NVIDIA to remain above 180. 180 on NVIDIA is very similar to Apple's 230. So if both of those levels can maintain itself, then sure, it's nice to be bullish. But a situation like this, where you're really trying to break above on NVIDIA here, you're really trying to break above 184.50. Multiple times for about a week, we've been trying to break above 184.50. Failed multiple times. This is not an amazing bullish situation. You can see that if the market remains below 183, if 183 on NVIDIA remains as a level of resistance, then this can drop into the 170s. The risk reward to the downside, just in terms of a stop loss, right? Because if you were to try to go short on NVIDIA here, as close to 183 as possible because that would be the stop loss. All right. So say, for example, you're getting $2.50 of risk. You have a lot of downside. You have at least, this would end up being a 2 or 3 to 1 risk reward trade to the downside, in my opinion. And the risk reward favors the bears right now. For just purely looking at the chart, it favors the bears. On paper, no ifs, ands, or buts, this is favoring the bears. You can, we could continue ripping. Oh, well, congratulations. But this is favoring bears for a move to the downside. If bulls rip it up to the upside, it is what it is. But a trade is a trade. So there's that for NVIDIA. AMD is also looking very interesting. So what we're going to do on AMD is the same thing that we did on NVIDIA. Okay, so we're going to take a look from the most recent lows to the most recent highs. And AMD is trying to hold above the 38.2% fib. For anybody to watch this video and say, oh, wow, this looks really, really bullish, you're either blind or you are completely biased for a bullish move. And the more people that are biasly bullish, the higher the likelihood chance that people are basically, if the majority of people become increasingly bullish at times where it's irrational to be bullish, that is usually a topping signal. So if, we watch the comments on this video, if you guys look at the comments on other videos or Twitter posts, and the majority of people are starting to become aggressive towards anyone that is bearish, that is a really solid topping signal. We haven't really gotten there yet, but AMD, this is not bullish. This is definitely not bullish. If AMD remains below 183, this is another situation where the reward is to the downside, and we could see 170s. So we're already retesting. So we broke below the 22.6% fib on AMD. There's room to go to retest the 38.2% fib. As you can see, we almost tapped it, right? The 38.2% fib is at 175. Almost tapped it. But this has room to go to at least 170 to 173, which would be the 50% fib. This is showing clear-cut overextension. This is showing that the market wants to get a bit of a pullback. We could, by all means, bulls can rip this up. But I'm telling you guys, 183 is the make-or-break level for a continued move to the downside. If you can maintain above if AMD can remain below 183, the market as a whole, AMD, should be pulling back. That is the bull-bear line. That is the line that bears want this to remain below. And if we get a bounce back above 183, then there's clear skies ahead. Clear skies ahead on AMD. So all eyes on 183 on AMD. But in general, this is not an amazingly bullish opportunity. I would rather be bullish above 183 on AMD. Because right now, it's showing some fatigue. Once again, 185, 187 area on AMD had multiple times that we were trying to rip to the upside, failed. And then AMD had a negative 2% day on Friday. So clearly some fatigue, some profit taking, and the vigor and the momentum of the profit taking is going to really, really manifest itself in the market if 183 remains as a resistance. All right? Because then things can get very aggressive to the downside, and a lot of people can get caught with their pants down in terms of being extremely bullish. All right? So there's that for NVIDIA and AMD. You guys are starting to get a concept of what I'm looking at in these large tech stocks. You're going to get an even bigger concept of what I'm looking at once we look at Microsoft. All right, so this is a daily time frame of Microsoft. Microsoft has been a complete winner for the past couple of months. We have been holding this trend line up since we had positive earnings on Microsoft back in May. We've had multiple touches. Solid bullish move. Amazing support. Clear-cut bullishness. We jumped up from 430 all the way up to 550. 430 to 550. That's almost a 30% gain in these past couple of months. But as you can see, we made a trend line, right? But most recently, what ended up happening is that Microsoft has been trading below this trend line. Not only has it been trading below the trend line, which shows fatigue in the overall momentum and the overall bullishness, this is starting to really show weakness at the 525 level. So Microsoft, one of the main winners, ChatGPT, OpenAI, all of these large AI-related instances, this is a company that's now starting to show weakness at a level of resistance, coinciding with chips also starting to show weakness. NVIDIA and AMD were also starting to show weakness. Microsoft obviously gets a big chunk of their revenue from their AI. If NVIDIA and AMD are showing weakness where they are the main manufacturers of these chips, Microsoft is also going to take a hit. So because if those stocks are taking a hit, a lot of these stocks move in unison. So Microsoft, 525 needs to reclaim itself. If 525 reclaims itself on Microsoft, if the 180, 183 level on NVIDIA and AMD can reclaim themselves, then things can be bullish. But this on Microsoft, this zone right here, is a bull-bear line. If we remain below this, Microsoft is going to continue to be bearish. If we can break above it, then there could be a chance that Microsoft comes back and retests 535 to 540 even in the next couple of weeks. Okay? So just keep that in mind. This is not the most bullish situation, in my opinion. But technically, right? Technically, we are really trying. Microsoft is really, really trying its best to hold this 518 level of support. So it is literally, so from a trading perspective, from purely a trading perspective, Microsoft is literally $2 away from a make or break level of support, and the upside potential is huge. So the risk reward for people to be bullish here is very, very high on Microsoft. It's very, very high on Microsoft because if you have a stop loss at 517.50, even 516.50, that's about a $3.50 risk to the downside for how much upside potential. Even if it's $15 to the upside that you would end up getting on Microsoft with a $3 stop loss, that's a 5-to-1 risk reward, which is a very, very phenomenal trade that you could end up taking to the upside on Microsoft. Pragmatically speaking, okay? Do I think that this is going to continue? Do I think that this is a good spot to be extremely bullish? No. What I would rather do is be bullish closer above 525, 526. If we show strength above that, then sure. But right now, this is more bearish momentum. The market could fall. But in terms of risk reward, it does favor bulls in terms of just purely risk reward. But in terms of momentum, in terms of what is going on the chart as a whole, we broke below a major uptrend. We failed to hold above it. Got a solid red candle on August 13th. Failed to break above. And why this 525 level is so important, guys, is this is essentially, what I want to show you guys, is 525 is essentially 50% of this red candle here. And algorithms, they use this. So when a large one-shot candle occurs, algorithms use that candle and the percentage of that candle as a combination of where the momentum should continue. So purely, when we make the fib level from August 13th, we have been holding below 525, 526, which is essentially the 50% fib of this candle. It has held almost perfectly 50% of this candle's move. So if we're remaining below 50% of the candle's move, it should continue to hold. Does that make sense? So as you can see, right, what I'm looking at in terms of the bullish structure and the bullish moves can be flipped, and the same thing can be applied to the downward moves. So what we saw was currently we're holding at the 23.6% fib, right? We closed below the 38.2% fibs, as well as the 50% fibs. Does that make sense? So let me just make this very simple, right? On the bullish moves, if the 23 and the 38.2% fib can hold as support, we can continue moving higher. On the bearish moves, if the 23.6 and the 38.2 can hold as resistance, then we can move lower. Plain and simple. Right now, things are holding as resistance. That's a big reason why I don't want to enter into any longs on Microsoft. Does that make sense? I hope this makes sense. So that's that for Microsoft. That's another added reason why momentum is starting to shift a bit bearish. Technically, they're painting a very bullish picture. We're holding support for multiple days. But guys, this is clearly, we're holding right below major levels of resistance on Microsoft. All right, so here's a chart of Amazon. As you can see, Amazon has had a massive spike to the upside. We're holding above the bullish level on Amazon. This green level has been a target to the upside, and we are holding this level as support. So 230 on Amazon is clearly a very, very major level of support. And once again, to see how bullish things can really be on Amazon is we're going to make a fib level from the most recent lows to this most recent high here. And as you can see, the 23.6% fib on Amazon is at 228.70. The 38.2% fib on Amazon is at 225.50. So both of these levels to the downside are still applicable to get touched. The 230 level is the first line of defense. Below that is 228.70. And then below that is 225.50. All of these levels are solid areas where bulls can step in and continue get a bullish move. Amazon does look very, very bullish. It looks way more bullish than these other large stocks so far. 230 is a major level of support on Amazon. In my opinion, it looks more bullish than chips, and it looks more bullish than Apple, in my opinion. So 230, very, very bullish for a continued move on Amazon. Tesla, however, does not look as bullish as Amazon. So what we're going to do on Tesla, nice and simple, we're going to take a fib level from the most recent lows to the most recent highs, and we're going to see where we're trading on Tesla. So as you can see here, we broke below the 23.6% fib, and we are remaining and testing right at the 38.2% fib. This is the level that really, really needs to maintain itself for bulls, for a continued move to the upside. Because you can clearly see that there's bearish momentum here. If we remain below 338 on Tesla, if we don't break back above 338, 339-ish area on Tesla, we can see sub 330. And this is very, very doable. This is not out of the norm. This would be a completely solid move. This would be nice, simple retest of levels of support. Come back to 320-ish area. Because clearly, this is not the most bullish situation. I would rather be bullish on Tesla if we can break back above 338. And this would be us. If we can break back above 338, then Tesla is definitely, in general, all of this move on Tesla, all of this is a good buying opportunity. Okay? Tesla is going to end up hitting above 400, 450 in the coming months. So all of this, what we're seeing right now, is just a matter of how much lower we're going to go before we start to really rally. That's all this is really setting up for, okay? So in my opinion, right, what we're seeing right now is not the most bullish situation on Tesla. They're painting a pretty bearish picture, actually. So what I would much rather see on Tesla is if we could remain below 338, get a bit of a pullback to 320, 315. That would be a really good, awesome opportunity to go long, in my opinion. or if we can break back above 338. Those are the two spots that I would rather try to be bullish at. Right now, we're literally in the middle of a major level of support and a major level of resistance. Okay, so trying to buy over here where the risk reward is not as applicable, right? It's not as great to try to buy in the middle of support and resistance. You would rather try to go long above resistance or go long at a level of support. Okay, so that's essentially the situation on Tesla. This is a pretty bearish setup, pragmatically speaking. Unless Tesla just decides to gap up in the morning, that's completely irrelevant. But purely what we're seeing right now in terms of just the setup itself, just the technical setup right now, this is not the most bullish situation on Tesla, okay? So those are the levels that I'm looking at on Tesla here. So Google has been a major bullish move that we've got on Google. Basically, we were bullish on Google down here in the 170s. We are now at 204. Okay, so we broke above the major target that we had on Google to the upside. The target that we had on Google was 198. We are flying above it. Now, the issue currently on Google is that there has been 1, 2, 3, 4 days in a row where we tested 205.50 on Google and we failed to close above it. So once again, look at how many times we tried to test this 205.50 level. Multiple times. This is clearly not what bulls want to see. And then even on Friday, we wicked above it, really rallied above it, failed to break above it. So this is this 205.50 level is clearly acting as a major level of resistance. If we can break above it and hold, close on the daily time frame, if we can close above it, then that would show a lot more bullishness. But right now, it's really tough to just be bearish on Google, obviously. But this is not, this is really not an amazing opportunity to go long, in my opinion. This is not the time to go long. We're not close to 202, 200, which would be a much better opportunity to try to go long. If we get a retest at 198, that would be a better spot to go long. But right now, into all-time highs, into a wick, right at a level of resistance, not the time, in my opinion, to try to go long on Google. But there definitely is bullish momentum and clear-cut strength. Okay, so what we could also do on Google is we can make a fib level from the most recent lows to the most recent highs. We're holding above the 23.6% fib. We got a retest of it on Friday. So algorithms knew to retest the 23.6 on Friday. We got a retest of it. We closed above it. But the 38.2% fib is at 200. And the 50 is at 198. So it would basically coincide with a retest of where our target was. So our upside target is now the main level of support. So if we get a retest to that, that would make a lot more sense, in my opinion. So we're going to have to see if we get a pullback to this 198 level, which basically coincides with the 38.2, the 50% fib on Google. And that's what we're essentially going to see for Google. Google's showing a bit of a topping, right? Apple, Nvidia, and AMD are not showing as much strength. Amazon is showing the most strength so far out of a lot of these tech stocks that we just saw. And Microsoft is teetering at a level of support. Tesla is also showing some weakness. So we're looking at a lot of these tech stocks as a whole. And a lot of them are not showing extreme continuation strength. They're starting to show some cracks. And when they're starting to show cracks in their armor, not the best time, in my opinion, to start going long. A lot can change. Obviously, the futures right now are still green, right, as we're making this video. But we're seeing what's going on with these large tech stocks pragmatically, right? So that's what I wanted to show. Next, we're going to take a look at Netflix. So Netflix, obviously a big winner. This is clear cut. Netflix was very interesting as well, because all of these large tech stocks, Microsoft, the NASDAQ, everything was in a clear-cut uptrend, right? Multiple touches to the upside, monster move, right? Spectacular. But back in July, early July, Netflix started to fail and broke below the uptrend level. Once this occurred, I became very bearish on Netflix. And this essentially held this level of resistance at 1300 perfectly. And we did not retest 1300 since. We instead dropped $150, almost over 10% on Netflix, came back to 1150. At 1150, this was an amazing opportunity to go long. And now, as I was mentioning that these were bullish situations, good dip buying opportunity on Netflix, we have rallied back to a major level of resistance. Now, for us to see how much more room there is on Netflix, you can also use the Fibonacci levels. So what you do on Netflix, since this is a way more bullish, right, and has had a bullish move, you take a fib level from the most recent highs, so back in June where we made the highs, to the most recent lows. And now we are getting a better understanding of levels of resistance that Netflix is going to touch. And what do you know? Almost perfectly, to the cent, Netflix has failed to break above the 50% fib here. So as you can see, Netflix is clearly holding the 50% fib. The 50% fib on a daily time frame. Very, very major level of resistance. So if we can hold back above the 38.2 as a level of support at 1220, you can clearly see 1242, 1243. The 50% fib on Netflix is holding as a level of resistance here. And there's no reason why we can't break above. There's no reason why. Because this is clearly, it's setting up for another move to 1280, 1300, in my opinion. So, but pragmatically now, we are at a level of resistance. So would you rather wait for a break above a level of resistance to go long, or a retest of a level of support? I would rather get a retest of support. So that's essentially what I would rather do, because we're not in Netflix right now. If Netflix can come back and retest the 38.2 or break below that, then yes, that would be a much more optimal time to enter into a long position instead of trying to enter into a long position after a large move to the upside has already happened and after we are already at a level of resistance. Because pragmatically, we are at a level of resistance on Netflix now, okay? We shattered through the 23.6 with this large green candle. We shattered above the 38.2 as well. But now we're tapping. We're tapping at this 50. So unless we could break above the 50, then there is a, I would really want to see a break above the 50% fib before really getting aggressively long on Netflix, starting to chase up here. Okay, but because we already jumped up over $100 on Netflix from the most recent lows in the past 2 weeks. Is now the time to really start to become aggressively bullish? No, this is where a lot of bulls are going to start taking profits. Here and at the 6.8% fib, this whole area here is where bulls are going to take profits. And this this zone is where people are going to have to make a decision to see whether or not things are going to remain bullish or if this is a good spot to take profits and to lean short again. That is what we're getting to. So the 50 and the 6.8% fib, this zone, is where people are going to start taking profits. Everyone that went long down here is going to start taking profits up here. And when people are starting to take profits, that is generally not an amazing time to start going long, in my opinion. All right, so there's that on Netflix. Meta is also really, really trying to break above 793. But we've had multiple days on Meta where we are failing to break above 793. How many days? How many days is this? Look at this. 1, 2, 3 days where we tried to retest 793 each and every single day. We wicked at it, failed to break above. And this is no different on Friday. We got a wick above 793. All of these days have failed to break above. And this is not a time, for this reason, this is not a time, in my opinion, where you want to be aggressively bullish to the upside. When things are showing weakness at a specific level, this is not when you want to aggressively be bullish. So as you can see, Meta, a lot of these chips, Microsoft is at a level of support, but showing bearish momentum. Tesla showing a bearish picture. Google, a lot of these stocks are not looking great, right? But they're still showing clear-cut bullishness, right? We're still holding above support, but things are getting to levels of resistance, and we're failing to cross above the levels of resistance. The main thing here is that the longer it takes to rip above levels of resistance, the higher the likelihood chance that a large move to the downside is going to occur. So to really, really wrap all this up and to really bring all of this home, after looking at all these large tech stocks, I want to look at the QQQ together, okay? So the QQQ is obviously the NASDAQ, right? And what we're looking at on the NASDAQ here is that most recently on the 13th, we had an open and close outside of the upper level of the Bollinger Band. Shows extreme overextension to the upside. When a large tech stock or one of these ETFs is at an all-time high, and we're also trading above and closing above the upper level of the Bollinger Band, the Bollinger Band essentially shows the standard deviation away from the mean line. The mean line is the 20 exponential moving average. So you guys know how, the 8, the 13, the 21, there's different exponential moving averages. There's different moving averages in general that people look at. The 20 is very, very important. So this Bollinger Band to the upside and the downside is either 2 positive standard deviations away or 2 negative standard deviations away. When we are trading this far overextended the positive or the negative standard deviations on the Bollinger Band, this basically tells us that we have to return back into 2 standard deviations. So on August 13th, this candle here, we were trading above it. We were trading above 2 standard deviations, which is very, very algorithmically and mathematically improper. So what ended up happening was we returned back in. Nice and simple. We returned back in. If we were trading down here, this would essentially be us trading 2 standard deviations below 2 standard deviations. So what would end up happening? We would bounce, and we would end up going long. Okay? Purely based off of what just occurred on the QQQ. Purely based on what we are looking at on these AI-related stocks, on the Magnificent Seven, we really, really need to break back above 181 on the QQQ. Because if the QQQ does not break back above 181, this is a clear-cut level of resistance with a major bearish momentum play. What is the momentum play that I'm looking at right now? We were just overextended in terms of standard deviation to the upside. Wouldn't that be all the more reason for people to sell, right? Wouldn't that be a great time for bulls to start taking profits? When a place is a great time for people to start taking profits, what do they have to do? They have to sell the stock. What happens when you sell the stock? Things drop. In a time where it becomes algorithmically proper to sell a stock, where the move to the downside occurred the next day, where a continuation to the downside occurred 2 days after, this is clearly starting to show some bearish momentum. This is why, to break the downside bearish momentum on the NASDAQ right now, 581 needs to get ripped. We need to break back above 581 on the NASDAQ. Because if we do not, we are going to end up seeing sub 570 on the QQQ. This is clear-cut bearishness. By no means in terms of a day trade. Look, I could be wrong. I don't care. I'm purely showing you guys my thought process in terms of unbiased. I'm giving you guys the level. If we do not break above 581 in the next 2 days, this is going to drop really, really aggressively. So I'm telling you guys, 2 days. It needs to hold. It needs to break above 581 in the next 2 days. If it does not, then things are going to be very, very bearish. It's not going to look too good. Because even in terms of a day trade, this setup, I would never in my life would I try to go long on this setup in terms of a day trade. Because my day trades, right? The same algorithms work. Excuse me. The same algorithms work on a smaller time frame the way that they do on a larger time frame. The market makers are the same. So they use the same patterns. On a day trade, on the 1 minute time frame, I would never go long here. This is a bearish setup. I wouldn't want to go short. I definitely would not really want to go short. I would much rather try to go short closer to 582, 583. But even then, right, if we break back above 581, I generally would not go short. But that is the main level here. 581 needs to, like, basically what I would do in terms of a day trade is I would have 581, 582-ish right here as a stop loss for shorts. That's essentially what I would do. I'm sure if you guys are in the group, you guys would see setups like this. These are setups that occur often. This is not a bullish setup. The only thing that can really stop this bearish momentum right now on the NASDAQ is extreme buying pressure and a bounce back, rip right back above 581. That's it. You cannot argue with that. That's literally it. I'm correct. I'm giving you guys the level. Biases to the side, opinions to the side. This is what's going on with the market. The large tech stocks are starting to teeter. The NASDAQ is already making relative lows where, Apple and Nvidia, they're still holding their ranges, right? The NASDAQ is breaking below the lows for a reason, because the NASDAQ was algorithmically overextended and bears and buyers are getting fatigued, and it just becomes a good spot to sell. So that's essentially what's going on. We need a break back above 581. That's it. There's nothing else to talk about on the NASDAQ. And when we're looking at the SPY, right? This is a daily time frame of the SPY. Does this look like any good opportunity to go long? We are failing to break above 645, 646, clearly, for 3 days in a row. 3 days in multiple days in a row. How many times have we failed to break above on Meta, on Nvidia, on the NASDAQ? All of these different stocks that we just looked at. The SPY is no different. This is not a bullish setup. You don't want to go long at a level of resistance, guys. We could still rip to the upside, by all means. But this is starting to get to a point where bulls, are starting to take profits. Everyone that went long down here at 625, 630, this is starting to become weakness. It's starting to show fatigue to the upside. This is not where you want to start going long, in my opinion, okay? Because clearly, 645.50 and 646 are holding as a major level of resistance. Nice and simple. The NASDAQ is showing weakness. The SPY is at a level of resistance here. All eyes basically on this 645.50, 646 level. You can't argue with this level here. And what I really want to show, once again, is the fib levels from the most recent lows to the most recent highs. We have not even retested the 23.6% fib. The 23.6% fib is at 639.70. We almost always get a retest to the 23.6% fib. For us not to even get that yet shows extreme strength. But if we do not break back above 645.50, 646, then sub 640 on the SPY is on the table. Similar to sub 570 on the NASDAQ is on the table. A break below 640 is on the table on the SPY. You cannot argue with this. This is the beginnings of a top. This is the beginnings of intermediate weakness. I'm not saying that we're going to top out here. I'm not saying that we're going to drop down to 600, 620. Control yourselves. I'm not saying that. What I'm merely saying is in the short term, this is setting up for a bit of a move to 640. If the market wanted to drop down to 640, what would need to happen? What would be the checklist? Pragmatically, right? What would need to be the checklist? Number one, resistance would need to be tapped multiple times. That occurred. Number two, we would need to fail to break above resistance multiple times. That occurred. Number three, solid red candle. That occurred as well. Number four, the NASDAQ would need to show some more weakness relative to the SPY and the IWM. That also occurred. And then number five, a lot of these large tech stocks are also showing weakness. 5 major things occurred. We haven't even started talking about the VIX. So once again, guys, I could be completely wrong. But just in terms of numbers, just in terms of logical pragmatism, this is the beginnings of a bit of a move to the downside. And I am fine with being wrong on the larger time frames. But guys, this is just, I would be shocked if we end up ripping new highs. And the only bullish sort of setup that we have here on the SPY, the only real bullish setup that we have here on the SPY is if you want to take a very, very tight, aggressive long with 642.20 basically holding as support. So if you want to go long on the SPY with 642.20, that is basically the make or break level right now on the SPY. 642.20. If that level holds as support, throw everything else that I just said out the window. But that is literally $1 away. That's $1 away as support. So the risk reward on the SPY is there. If you want to play it to the long side, that is the level that needs to hold. On Microsoft, the risk reward to the upside is there. 517 to 520 on Microsoft is the level that needs to hold. So we are seeing a lot of upside moves potentially and a lot of levels of support that could hold by all means. But the odds are starting to lean a bit. I would be really shocked if this strength really, really continues. But these are the numbers. These are the ranges and these are the setups that could hold. I could be wrong, but I'm trying to give you guys an as unbiased of an opinion, unbiased of everything as possible, okay? And in terms of a day trade, I would not take this. I would go short. In terms of a day trade, I'm telling you guys exactly what I would do. I would almost positively go short with 645 as a stop loss, honestly. And that's what I would do. I would go short here. Because the downside potential is so juicy. There's so much room to the downside, guys. In terms of a day trade, I would almost always go short. All right, so there's that for the SPY. And of course, we have to take a look at the VIX. The VIX is so important to monitor because it has an inverse relationship to the market. If the VIX rises, inverse of that, the market falls. So if the VIX rises, the market falls, okay? What is currently going on the VIX? This $14 level is major level of support. At support, guys, what ends up happening on a stock? If a stock is at a level of support, what happens? You bounce. So if the VIX is at a level of support, what should be happening? The VIX should be bouncing, right? And another thing that's going on right now on the VIX is this is a falling wedge. On the VIX, at a level of support, the VIX should be bouncing. The VIX looks like a really, really solid opportunity to try to go long on the VIX. Pragmatically, I'm not saying, I'm purely showing you guys what is going on. The VIX looks bullish. We are at a level of support. We need to hold above 15. We're holding above 15. This is showing a potential squeeze, a bounce to the upside. And if the VIX rallies and bounces, the overall market should be falling. Okay? Purely, point blank. I'm not extremely bearish. I'm not extremely bullish. But this is what's going on. A falling wedge, which is a bullish pattern to begin with. A falling wedge here. Boom. Falling wedge at a level of support. Double trouble. Setting up for a bounce. Held above a major level of support. Major level of resistance. Broke above it. Guys, VIX looks bullish. If the VIX is bullish, the market should be falling. All of these things combined as a whole is showing some bearishness in the market. I'm telling you guys, the only way that the market becomes extremely bullish is by some sort of miracle. It's by a miracle because there are so many bearish setups in the market as a whole. It's kind of shocking. Like, now just to really collect my thoughts here. All right, because we've been this video is 56 minutes long so far. On paper, let me make this very clear. On paper, there are so many bearish pictures that they're trying to show. Many bearish pictures. But when the market as a whole is so bullish, bearish pictures are just bear traps. So what I showed you guys is that on SPY, on Microsoft, there's some solid good longing opportunities. But on these other large tech stocks, they are really showing weakness at major levels of resistance. So the issue, guys, is that things are really on the precipice. They're on the cusp of making a very major decision in these next couple of days. And, you know, when something is when it's showing this much bearishness, the odds of us falling should be high. But then the issue, guys, once again, is that there's just so many buyers in the market. And you can't argue with that. So, just on paper, guys, the large tech stocks, I tried to show you guys as solid and as, the situation is what it is. I can't really argue with that, and you can't really argue with the results. But that is simply the results of what we're looking at on these large tech stocks, the SPY, the NASDAQ, as well as the VIX. And to really bring it all the way home here, this is a chart of the Russell 2000. The main three indices that really move the market are obviously the Dow, the SP500, and the NASDAQ, right? The Russell 2000 heavily influences the S&P 500, okay? So if the Russell 2000 is extremely red, the NASDAQ can be somewhat green, but chances are, because the Russell is red, the S&P 500 is also going to be red. So we have to monitor the Russell 2000. And what we're seeing right now, similar to the NASDAQ being very far overextended in terms of the standard deviation, right? What I was mentioning before, when you're trading outside of the upper standard deviation away on the Bollinger Band, you get a bit of a pullback. So what is going on currently on the IWM? We're getting a bit of a pullback. We're getting some sort of weakness. But again, guys, the IWM is teetering, holding 226 for dear life. If it can hold above 226, then the IWM is going to continue. And when you take the fib level from the most recent lows to the most recent highs, 226 is literally the 23.6% fib. You cannot argue with that, okay? If we hold above the 23.6% fib, we're going to rip up higher. But if we do not hold 226, the IWM is going to come back and retest 220 to 221. This is going to be a big move to the downside because on the IWM, on the SPY, and on the NASDAQ, Everything is at a major level of support. And if we do not hold these levels of support, the bullish momentum is not going to be able to sustain itself. And this is generally, once again, guys, this is generally, I would be going short at 229, 230. And I would have a stop loss right at the highs, and I would be targeting 220, 218 to 220 if this was a day trade, because the downside potential is so much higher. That's the issue currently on the market. The downside reward on a lot of these indices is so much higher than just trying to go long, just throwing longs at the market. That's the issue. We could end up working. These longs can work. The easiest thing is you just wait for a break below 226, and momentum should really start to really start to pile on. Okay, so there's that on the IWM. There's that for the overall stock market. Next, what I want to do is I want to take a look at the Indian markets. All right, so this is a chart of the Nifty 50. Please, sir, do not redeem. All right, so as you can see, technically, this is pretty bullish. Okay, so we're at a falling wedge. We held above 24,300 on the Nifty. Clearly bullish. Okay, this is a falling wedge. Falling wedges are extremely bullish patterns. If the Nifty can hold above 24,500, we can continue rising, and a rip back above 24,800, 24,900 is right around the corner. And this is, to be bearish off of a setup like this is disingenuous. What I really would want to see is if this fails, this 24,500, 24,550 level fails. If 24,550 fails on the Nifty, then we are going to almost certainly retest the 38.2% fib. And definitely, we wouldn't really want to go long until the 38. If we fail and break below the 38.2, you don't want to go long until it rips back above the 38.2, and then you could have this as a stop loss for a move higher. Okay? Currently, that's the levels right now on the Nifty. If we remain above 24,550, then it's bullish. So for the HSI, for the Hang Seng Index, the Chinese markets, pragmatically, things are not looking that great. It does look like we should be getting a retest to around 24,900 soon. And if we get a retest of 24,900 on the Hang Seng, then almost certainly we're going to get a bit of a retest to levels of support on the Chinese stocks in the overall stock market. So JD, as you can see, JD.com is holding above 3080. 3080 really needs to hold on JD. Baidu. So Baidu is also a bit more bullish than JD. It's holding above 8850, which is right at the 20 exponential moving average. So Baidu is holding support. JD is at a level of support. Alibaba is also showing some strength at the 20 exponential moving average at 120.50. So in general, the Hang Seng made a massive move to the upside. We retested all-time highs, right? Now, it makes sense to get a bit of a pullback and to maintain, to see if support can hold. And a lot of this is going to be affected by the tariffs that Trump is essentially trying to negotiate between Russia, India, and China. A lot of the tariffs that we're going to end up getting towards China are primarily targeted towards Russia because they want to deter Russia from continuing their invasion of Ukraine. If the United States does not make Russia essentially financially burdened, then Russia has free game to take over the eastern border and the eastern part of the Donbas region of Ukraine. And this essentially is a big slap in the face to the United States, to capitalism, and especially if the main thing is if Russia starts to get some positive influence internationally, then China is most certainly going to try to take, even start to attack Taiwan. Okay. And Taiwan, as you know, is a major U.S. ally in the East. It is essentially the equivalent of Israel in the East. Not as bad, right? But Taiwan is essentially our main ally in the East. And, you know, if Russia starts to win against Ukraine, because right now Russia is just destroying Ukraine. Russia is really winning the war right now. The only thing is that the United States has not started to provide Ukraine with more weaponry. And in response, Russia pulled out the nuclear weapon card. And a country only really pulls out the nuclear weapon card when they are cornered, when things are not looking too great. It's what the United States did during the Cold War. The United States, because they were militarily not as advanced as the Soviet Union, they had to pull the nuclear weapon card. So in my opinion, when a country in general, on the larger scheme of things, on the larger chessboard, is not as economically or financially as well as militarily equipped to take on its adversaries, very easily to just be like, hey, guys, we have nukes. So it's easy to do that. It's what Israel just recently did as well. Because, hey, like they were getting bombed by Iran. They were getting completely decimated. But then Israel basically said, look, we have nukes. Israel also did this exact same thing during the Yom Kippur War in the 1970s. Israel said, look, we have nukes. If they came to the United States and told the United States during the Yom Kippur War of 1973, listen, guys, Egypt and Syria are whipping our ass. We have nukes. If the United States, if you guys do not stop Egypt and Syria from attacking us, we have nukes. We're going to nuke them. So the United States ended up making a deal, and they really made sure that Egypt and Syria would stop attacking. And essentially, that was a big hindrance to the Soviet Union to this day in the Middle East, because the Soviet Union was the one supplying weapons to Egypt and Syria at that time. So now this is a culmination. This is 50 years later. This is Ukraine and Russia. This is Russia directly attacking Ukraine, its neighbor. So this is not two proxies. This is not a group of proxies attacking each other. This is the mainland country attacking its neighbor. And the United States said they would still be willing to provide they would still be willing to provide Ukraine with Patriot missiles. Missiles that would be able to directly impact Moscow and St. Petersburg. They asked Zelensky, the U.S. asked Zelensky, if we provide you guys these weapons, would you guys be willing to use them on Russia? Which clearly shows the offensive nature that the United States is willing to have in this war. But then in response, what did Russia do? Guys, we have nukes. So obviously, it's a bit of a standstill. Russia obviously these countries don't want to use nukes, but it is a deterrent. Nuclear weapons are a deterrent. And to wrap it all up, wrap up everything that I was basically saying, to attack Russia financially, what America did was they tried to say that they would impose sanctions on India. They wanted to impose sanctions on India and gave India 30 days for sanctions. It doesn't immediately cause sanctions, but why is India relevant? India buys a lot of oil and gas from Russia. So if one of Russia's main buyers of their cheap oil and gas is going to get hit with a tariff of 25%, it's going to affect India's economy. It's going to affect how much money India is willing to spend. And it's going to affect how much money India is going to spend trying to buy their oil and gas from Russia. So indirectly, this is going to affect Russia, right? So that's why the United States imposed the tariffs on India. Same concept of what is going on with China. The United States wanted to impose tariffs on China as well. Bit more of a direct impact because India is not a direct adversary. China and Russia are more direct adversaries to the United States. So with that being said, a lot of fun, interesting things are going on right now. a lot of amazing, fun geopolitical things, lots of nice 4D chess going on. And just in terms of the markets in general, beautiful, beautiful, beautiful situation. Really, really fun. With that being said, we looked at the Hang Seng, we looked at the Indian markets, we looked at the overall U.S. stock market. Now what I want to do is I want to look at Forex, gold, silver, and crypto. All right, so let's take a look at silver. All right, so silver, very, very simply, this is a bear flag on silver. If we take a look at the most recent highs to the most recent lows on silver, we'll get a good understanding of where we currently are in terms of resistance. And what do you know? We are sitting right at the 50% fib on silver. This is not the most bullish situation currently on silver because we are at all-time highs. We are skyrocketing up. We are at all-time highs. Once again, silver, in my opinion, to become really, really bullish and to become aggressively long, I would want to see a close above 38.28 on silver. That would show a lot more strength. I would feel a lot more comfortable to be long. But of course, you know, even if we break above the 618% fib, that's excessively bullish. That is, it's setting, like it's continuing to be very, very bullish. But if, just let me make this very, very clear. If silver breaks below 37.50, there's a lot of downside potential on silver. And because, first and foremost, this is a bear flag. This is an all-time high bear flag tapping back at a level of resistance. And if we break down below the 38.2, this is going to be a massive, big move to the downside, in my opinion, on silver. Gold also is literally teetering at this level of support that we've been monitoring for so long. 33.30 on gold has been such a major, important bull-bear line. Bullish above, bearish below. Very, very simple. As you saw multiple times, even for weeks now, we've been monitoring this 33.30 level. If we are holding above it, clear-cut bullishness. If we are holding below it, clear-cut bearishness. Once again, clear-cut bullishness if we hold above. And right now, once again, we are holding below. So it's getting to a point where if we break down below 33.30 again on gold, this is going to be a move lower. And this is just, it's been like this for quite some time. We were in a massive, massive uptrend on gold for quite some time, right? Since the beginning of January. Massive uptrend, multiple touches, lots of bullishness. But then recently, in the end of June, we finally broke below the trend line. We did reclaim it, ended up being bullish again, but then, you know, we broke below. We reclaimed it, remained bullish again. But then this was a massive drop to the downside, a retest back to around the 786% fib of this move. And now we are falling down lower. This shows more room to the downside, back down to 3,300, in my opinion, on gold. If gold can remain above 33.30, then it's bullish. But right now, the momentum is starting to chip away to the downside. It's showing some bearishness. It's showing some weakness. But once again, the 33.30 level is so important on gold. And that's currently what I'm looking at right now on gold and silver. So the Euro USD is clearly bouncing. It's been bouncing. We've been in a massive downtrend since 2008. We are clearly bouncing now. We hit lows down here in the beginning of January of 2025. Every dip, in my opinion, on the Euro USD is going to be a good buying opportunity. Currently, right now, we're holding above 116. We're holding above 117. This is still a solid bullish opportunity on the euro. And a lot of this also has to do with basically what's going on with the tariffs and overall just Europe in general. So with that being said, holding above 117 is bullish on the Euro USD. Specifically holding above 116.30 is also bullish. There is still a lot more room to the upside if we hold above these levels of support down here at 115 or 116 levels. 118, 119 is on the table. This is still very, very bullish. This is a bull flag on the euro. And as long as, once again, we hold above 116, we can rally back up. If we break below 116 on the euro USD, we are going to retest this uptrend level from back in January. That's my thought process currently on the euro USD. The British pound USD is also extremely bullish. We have been in a massive downtrend since 2007, 2008, and we have just recently began to really, really bounce. And clearly things are in an uptrend. This is still really bouncing, right? Since September of 2022, monstrous bounces. Every dip is still a really solid buying opportunity. We've been in a monstrous uptrend since January of 2025 as well. Clearly held this uptrend level very, very well also. And we're now retesting that same exact trend line as a level of resistance. Once again, 134.60, in my opinion, on the pound needs to hold as support. 134.50, 135.50 needs to hold as support here on the pound. If that remains, we are going to rip back up into the 138, and then eventually we can rip back up into the 140s. But right now, pragmatically speaking, we are at a level of resistance. Is this the best time to start going long on the pound? No, it's not, because we're at a level of resistance. If it can remain above 135.50, then yes, you could have a tight stop loss for a move higher. But chances are this trend line test might fail. We might retest back to 135, and at 135 would be a better opportunity to go long. By no means am I bearish on the pound or the euro. But pragmatically speaking, we're at levels of resistance. It makes sense to get a bit of a pullback for a continued move higher. And that's currently what I'm looking at on the pound and the euro. Bitcoin, nice flat move all throughout these last few days. We had a massive spike up to 124. Lots of institutional buyers coming in. Lots of options flow in the overall stock market. On crypto names, on IBIT, on Ethereum, on Solana. Lots of institutional buyers were piling into Bitcoin recently. And this just set up for a massive drop lower. So we dropped down about 5-6% from the most recent highs. That's not a huge pull down, right? But currently what's going on Bitcoin here is that we really need to break back above 118. And what I want to show you guys right now on Bitcoin is where we're currently at in terms of the Fibonacci levels from the most recent lows to the most recent highs. Okay, nice and simple. So what I want to show you guys right here is from the most recent lows to the most recent highs. Where are we? We're trading essentially right at the 50% fib. For a continued move to the upside, we really need to break above. We really need to break back above the 50% fib because this is starting to show bearish momentum. A large red candle like this with teetering small baby candles here, barely any movement at a level of support shows two things. It shows obviously that sellers are not willing to sell and break down support. Buyers are not willing to really aggressively buy and make us bounce. So what's going on is similar to what is also happening on the NASDAQ. So what Bitcoin is basically showing is you don't really want to become bullish on Bitcoin unless we get a break back above 118. The other most opportune time is let this momentum fall, and you can end up buying the dip closer between 112 to 114. At this point right here, if you did want to go long, this would need to be a very tight stop loss. But the issue with this, you could go long here. You could absolutely go long here on Bitcoin. By all means, trying to go short at a level of support is never smart. but it would need to be a very, very tight stop loss. The better trade, so there's three main trades you could take. Number one, you could go long at the 618% fib as a level of support. By all means, you could do that. That is really tight, solid trade. Number two, you could wait for a break back above 118,500. Also another tight, solid trade. The stop loss would be 118. Wait for a break above 119. Another nice, solid trade. Number three, the best trade, which might not happen, is you wait for a pullback to 110 to 114 area. That's more wishful thinking, in my opinion. But clearly, we're holding this level of support. Trying to short for a continued move lower is very aggressive. And they are trying to really paint a very bullish picture on Bitcoin. So to try to really just talk yourself out of trying to go long here is not the best course of action. For a day trade, this 618% fib is really, really important. And most people are going to try to go long across the board using this level of, as an invalidation level, as a level of support. So now the real issue, right? The main reason why Bitcoin was really rallying recently was because of Ethereum's strength. So Ethereum and Solana both showed a lot of strength. And right now, Ethereum is starting to really try to essentially top out. Ethereum needs a solid break back above 45.55 very, very soon. And if we don't get that, if we don't get a solid break above this major level of resistance, which is essentially the 50% fib from the most recent highs to the most recent lows, if we do not break above this 50% fib level, Ethereum can drop down to 42. It could even retest 4,100. The odds of that happening might not be as strong because a lot of money is flowing into crypto right now, into a end of year rally. So it might not be the best logical trade to try to be bearish. Every single dip that we get so far should be a good buying opportunity. But on paper, you have a few choices. You can either go long right now with 4,300 as a stop loss on Ethereum. You can go long on Ethereum with 45.80 break to the upside. As you want to see bullish momentum, so you want to wait for 45.80 as a break, and you wait for us to break back above that for us to go long. Or you wait for a retest of 4,100, which once again is the least probable thing to occur. But, if we get that, that would be really amazing, and it would be an awesome opportunity to go long. Right now, Ethereum was very, very far overextended. It's really, really trying to bottom out and show some strength here. Similar to what we just saw in Bitcoin. We had a few days of just completely flat price action. So Ethereum is also trying to bottom itself out at this 4370, 4300 level. And we need to see if this level can hold. And that's what a lot of these bulls and a lot of market makers, a lot of institutional hedge funds and banks are really trying to do here on Ethereum. Solana is actually getting a lot of love recently compared to what Ethereum and Bitcoin are getting. So Solana, whereas Bitcoin was holding very flat and Ethereum was also holding very flat at support, Solana is bouncing much more aggressively actually compared to the other two. And there's going to be ebbs and flows in Bitcoin, in the altcoin market as well. In general, I am very, very bullish on Solana as a whole, right? We really need a solid break back above 196 on Solana for a continued aggressive move to the upside. But as long as Solana can hold above 183, 184, Solana is still very, very bullish. And this is still, in general, like a solid bullish sort of situation that we're looking at right now. So for us to really start to be bearish here, I wouldn't really want to do that. Yes, I know that Solana is in a bear flag at a level of resistance after being far overextended to the upside in terms of the standard deviation Bollinger Bands. Clearly, yes, I know this is very, very bearish, but crypto is a different animal. And just in general, over the next couple of months, I'm just going to be very, very bullish on crypto. I want every single every single dip is a good buying opportunity, in my opinion. There's no real reason to try to short anything on crypto. There has never been a point where I was bearish. I don't think I've ever even entered into puts. I don't think I've ever entered into long-term short position on anything crypto. I've always been bullish, and this is really no different. 184, 183 needs to hold on Solana. If that breaks, then 172 can end up being touched. So either or, this is going to be the least probable situation. You can go long on Solana with 183, 184 as a stop loss, or you can wait for a break back above 196. 3 solid long opportunities if you're not currently in one on Solana here. Litecoin, very similar situation, moving very similarly to Bitcoin. Had a massive spike to the upside and is now back to holding this 118 to 120 zone here. Once again, you can wait. You could try to go long on Litecoin here, wait for a pullback closer, or you could use this as a level of support, as a long opportunity. The least probable thing that would end up occurring is a pullback down to 107, 108 for another pullback, for another bounce opportunity, or very simply you wait for a rip back above 124, 125 to go long up here. In general, technically, guys, if this was any other stock, we should be bouncing back up to 126, 127. And if the market is really genuinely bearish, then this would be a time where at 126, 127 on Litecoin, this is where the market would end up getting a pullback. Are we going to get that? I don't know. But that, trying to be bearish at a fine level of support is very aggressive, and it's never really an amazing opportunity. It's never really a high quality trade, in my opinion. So there's that for Litecoin. And this is Link. So this is Chainlink. And clearly, whereas Bitcoin, Ethereum, Litecoin were showing stagnation, Link and the Link Marines are showing a big move to the upside. They're showing a lot of strength, and we're holding above 2490. Clear as day. Very, very big move to the upside. There's a lot of upside potential still on Link as long as 2490 can hold. Specifically, as long as 2450 can hold on Link. All of this is still bullish in my opinion. And we can eventually see $28 to $29 on Link. So by all means, guys, in general, as I've been saying, right? This is a very, very important time in the overall market, in crypto as a whole. And now is the time to be as frugal as possible. Look towards your future. Invest in your future, because these opportunities in crypto are not going to continue. The more mainstream crypto becomes, the less reward there is going to be to the upside. So I hope you guys like this video. It's been a solid hour and a half, and this has been a really, really fun video. I hope you guys enjoyed all of my analysis. I hope I did a good job explaining pragmatically what I think is going to end up happening with the overall market. And with that being said, if you guys want access to all of my trades, everything, all in one, once again, you guys could click the link down below. Make sure to like the video, comment on what you guys want me to do differently. I would love to help. I didn't check out PLTR. I'll go ahead and check out PLTR. But PLTR is very bearish. So PLTR, obviously extremely, extremely bearish. Palantir had a massive rip to the upside. Palantir had a massive, massive rip to the upside. What we're going to do is we're going to look at the most recent lows to the most recent highs, and we're going to see where Palantir is currently trading and what levels need to maintain itself. Once again, the market in general, the stock market, the NASDAQ, crypto, everything is literally at a very, very major level of resistance. If Palantir remains below 182, 183, then we're going to see below 170 on Palantir. Things are going to drop to 165 to 170 on Palantir. This is setting up for a massive move lower. But if we break back above 183, similar to the massive spike that we just saw in AMD and NVIDIA, everything is right at a level of resistance. But these next few days, we need to break back above 183 on Palantir. If it does not break back above 183, we're going to see below 170. We're going to most likely see into the low to mid 160s. That's my opinion. And, Palantir, people in the group were bearish on Palantir a couple days ago. And they, I'm sure, are killing it. And good job to everyone that was short on Palantir. The 183 level is very, very important. So with that being said, I hope you guys enjoyed the video. Please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. Have an amazing day. Thank you.